Hi, CindyDTeam here again with the CindyDTeam, and I've got Ruth Ann Sharp with me again with Prime Lending, and we want to talk about home, those wonderful things, the home mortgage process. Oh my, there's a lot of do's and don'ts, and we want to talk about those because we want to make this process easy for you because that's what it's all about. It's scary as it is, it's confusing, but it should be exciting.
Yeah.
So, what's some do's and don'ts to do?
Well, I'm going to talk about the don'ts because the do's are probably pretty common sense, but the don'ts, once you make application and you get pre-approved, pretty much fly under the radar until you close on your mortgage, which means do not go out and purchase anything major unless you contact your lender and say, hey, my car broke down. I'm going to get a new car. And your lender should ask, okay, what would be the monthly payment? And he or she should run the numbers and say, okay, you're fine, or no, your debt to income ratio is right here. Because if your debt to income ratio in some programs are over 45%, and a debt to income ratio is your total debt, installment loans, student loans, credit card minimum payments, that total debt cannot exceed 45% of your gross monthly income. And the gross monthly income is depending on if you're W-2 straight salary, you get X amount of dollars a month, or if you're hourly plus commission or hourly plus bonus, you've got to make sure your lender knows that when you fill out the application because that's treated a little bit differently. They do an average on your commission the past 2 years.
Right. So the other things that they shouldn't be buying is, like you said, a car, furniture, new appliances.
A lot of customers will go to Nebraska Furniture Mart, and which I would too, and I have, to get some new furniture or appliances. Just make sure to make sure you check with your lender before you do anything like that. But if you do go get a Nebraska Furniture Mart card and it's right before closing, they do a check to see if anybody has taken out any new debt, and then you're just going to have to jump through hoops. You're going to have to get a statement. If it may be too soon to get a statement, but you're going to have to call Nebraska Furniture Mart, ask them for some type of statement saying what your monthly payment is going to be, even if it's same as cash, meaning you don't have a payment.
Days.
They are going to count a payment against you on that. So just know that lenders have to verify a lot of things. They know everything that you're doing in life. There are fraud reports. There are checks, especially now with COVID, there are checks on your employment. So if you have any change of your employment, meaning if you've been furloughed or if you have a cut in pay, the lenders will know about this. So just be honest, be upfront, be transparent, let your lender know, so they can figure out a plan B or a workaround.
Right.
So as long as they know they can do it. Another big thing is don't transfer money. So meaning, if you've got an account here and an account there and you sweep money back and forth, you think it's no big deal, and it really isn't. However, in the mortgage process, it is, which means you're going to have to paper trail all that. So that means you're going to have to get a statement from this account, a statement from this account, and it just makes you jump through more hoops and a lot more work for you.
So, for example, maybe you have a TD or a Schwab account that you're pulling some of that money from, and they want to put it into their checking account or their savings, and they do that. Maybe they do it in piecemeal as they're going through that process. Yeah. We still have to document it.
Yeah, and that's just
do it all at once.
That's just a lot more work. Yeah, or again, goes back to ask your lender. Ask your lender before you do anything. Is this okay? No, you need to do it this way, because there's a lot of real quirky guidelines in our industry as far as the money acceptable funds for closing. If you, let's say, sell a car and you're using that money for down payment, okay, that's okay, but you got a paper trail. So you have to get a bill of sale. You got to, they got to see you've sold this car, this car, and the money went into this account. So it's just a lot of backtracking.
Right.
And a lot extra paperwork that you won't want to go through. So just kind of keep it clean, keep it simple. And again, it goes back to fly under that radar.
And in other words, isn't it also smart that whatever they do, they need to have their life normal for that 60 days before they do that loan application? So that documentation.
That's a good point. So let's just say you've got money that came from someone or something.
A gift from mom and dad.
A gift from mom and dad, yeah. And you can do, most programs will allow a gift. We just got to, again, paper trail that. But in some programs require you have a certain percentage of your own funds.
Sure.
So they're going to go back 60 days. So 60 days of bank statements, and they want to see any deposits. Is this an unusual deposit? Okay, what is this? And then you got to paper trail that. So if you're going to get some funds from a unacceptable source, or you need it to be shown as your funds, get it in that account and don't open a new account, have it in your existing account and get it in there 60 days prior to starting the process.
Right. Just so smart.
Simple. Just keep things simple. The process can be tedious and it can be very challenging, but it can also be very easy. And the easy part is just fly under the radar. Just
live your life, but don't do anything out of the ordinary.
And especially now with the influx of business, with the rates being so low and a lot of people refinancing and a lot of people buying houses right now, it's taken a little bit longer for the process to happen. So the easier we can make it and painless we can make it, the better off everyone is. And just do things quick with your lender. So once you make application and you go under contract to buy a house and your lender says, okay, I need pay stubs, W-2s, bank statements, driver's license, get it to them quick. Every time they send you a document, because there's a lot of documents through the process that you have to e-sign, sign them quick. Just the quicker you can do it, the easier and quicker the process is going to be.
And don't question them, unfortunately, because you might have supplied that bank statement when you did the first application up front. Well, they may want one 30 days prior to closing, if not 2 weeks before closing. And if that comes up, don't question why, just do it. I mean, it's a pain about, I get it, but it's just one of those things.
Yeah.
It's document.
Yeah.
We don't like it either.
We had the worst part of my job is having to ask my customer, now I need this, now I need this, now I need this. Right. But we don't want to have to ask for that, but we have to per the guidelines and per what underwriters want. So Cindy's right. Don't question it. Just quickly get it to your lender because they're asking for it for a reason. They aren't going to forget about it and not need it later. They need it.
Yeah. It's unfortunate what's happened is the pendulum has swung from being so easy to get a loan back in the 08 era
07
to now it got pretty tight and then it loosened a little and it kind of got tight again because of COVID.
And it'll loosen up, but right now it's tight.
So in other words, just talk to us.
Transparency.
We're here. We want to make your life as easy as possible. This has got to be fun, but be smart about it. Again, thank you so much. I appreciate you.
You're welcome.
And we're glad you joined us today. If you have questions, please reach out to both of us. Thanks.